Hey everyone, welcome to another episode of Crypto Corner with myself, OJ, crypto analyst and investor for the last 9 years. It is Monday, beginning of a new week, almost beginning of a new month tomorrow. So let's open the charts and look at the price action and find out what will be my price targets for this week. Alright, so first a quick look at the markets. Bitcoin is at 83,200 right now. Ethereum is at 1,834. That's 1% up in the last 24 hours. Not a big gain by any means. BNB and XRP are pretty much same levels as yesterday. Solana as well. Many of the top coins here are actually at very similar levels. For the last couple of days, the weekend didn't really present any huge dumps or anything like that. Toncoin is actually up 6%. This is one of the bigger gainers here in the top 20, and Hype is 3% up since yesterday. So that's about it. Not a great performance in terms of altcoins. I think right now everyone is really watching what Bitcoin is going to do, because we know that as Bitcoin makes any kind of move, bigger moves, altcoins are bleeding. So that's why we're not really seeing a big influx of money into altcoins right now. And I'm also just trading Bitcoin currently. I'm also trading and Hype, but Hype I'm not really trading it actively. I have an open position, just one position, that's it. So Bitcoin was, yesterday Bitcoin was dropping here. We had on the 1 hour chart, we did have a bearish triangle formation that was happening, and we did drop out of this formation. So that was no surprise. This was to be expected, but I actually expected this to be a short-term breakdown, because we were pretty much at support levels, and as you saw, we actually dropped out of this triangle, and it was a liquidity grab. We just took out this liquidity here, and then immediately after that we started the upside move. So this was a very short-term drop. I'm not really expecting another one anytime soon. Right now we are moving within this triangle here, which is a bigger one. We've been forming this since the beginning of March, and here very soon I'm expecting that we are going to hit a resistance. So this is a nice move. If you are short-term trading, you can take advantage of this swing. I'm definitely taking advantage. I'm in right now. I have an open position. I'm expecting that, well, first of all, we have a Fibonacci resistance level here at the 85,000, and also the top of our triangle, this trend line, the downwards resistance trend line, we are most likely going to get rejected from it. It really depends on how fast we get to that line. If we are making a really fast move over the next couple of days, it's actually sitting at around 86,000, or if we take longer to get to that level, it could be actually 85,600, 85,300, depending on what time. We could also not really get rejected all the way up here, but even at this Fibonacci level at 85K, we could meet a lot of selling pressure and get rejected from here. So these are the possibilities. My price targets for the moment for this week will be these two levels, because this is where I'm expecting a lot of selling pressure and a rejection. Let's not forget that tomorrow is the 1st of April. So 2 days from now, we have the Trump tariffs kicking in. We'll see how it goes. We'll see if he's going to backtrack or anything, but most likely we are going to see these tariffs kick in. And when that happens, the markets are definitely going to respond negatively, because one way to look at it is that this could also already be priced in. I don't think it's priced in. I think that there's still a lot of uncertainty, and stocks are still dumping and everything. Gold is pretty much the only thing that is on the rise. So I'm not really expecting miracles from Bitcoin either. I'm expecting that we could actually see a sell-off on the day when the tariffs kick in, and it's also likely that we're going to see a rebound from there. So we'll see how it goes, but it is possible that we see a continuation of this move all the way up to here, and on the 2nd of April we can actually see a massive red candle on the downside, maybe even taking us all the way back to our support. So this is just one possible scenario. Of course, there's many possibilities. Right now, we don't really have any strong indicators to suggest that we are ready to be pumping hard. I mean, if we look on the slightly higher time frames, because I was on the 1 hour chart, 1 hour chart is really intraday, very short term. It's not something that we should be looking into very seriously. But on the higher time frames, this is the 12-hour and the daily as well. We have here a nice indication of a pump coming, because we have the moving averages of the stochastic RSI bottoming out. The blue line is already starting to curve, even though it's a little bit early, but it's already starting to curve. So probably in a day or two, we are going to be here really seeing the curves of these bottoming levels, and then it's going to start going up, because typically when it enters this region here, this is the oversold region, this is calling for a bounce on the upside. Now, it's not calling for an immediate bounce. We still have a couple more days, so it's possible that we see a sell-off on the 2nd of April, and then after that, we see the bounce on the upside. So this week, I'm expecting that the second half of the week especially should be better than what we saw last week. However, I don't think that this is going to be enough for us to talk about a complete recovery just yet. And looking at the weekly, this is also very important right now. We are having our 34 moving average EMA acting as a resistance. Now, this week, we might actually break above it, because currently we are making that attempt. In fact, right now we are breaking above this moving average. Now, it will be great if we can reclaim this level, this moving average, as a support. Currently, it's still a resistance. We'll see if we get rejected. Perhaps we are going to get rejected, and we might stay longer below this moving average. If we are below this moving average, we are very bearish, guys. So I really want to see the bulls step in here, reclaim this moving average as a support, is this line that we are seeing here. And then the bigger target and the more important target for me is the 21 EMA on the weekly, because the 21 EMA on the weekly is also a crucial support. So while we are below this and it's a resistance, we are still very bearish. So these are the two moving averages that we are looking that are really important on the weekly time frame. And as you can see, we are actually moving between these moving averages. We were actually between these moving averages until last week. We fell off and we dropped below both of them. Now, it's very likely that the price action that we're going to observe over the next couple of weeks is going to be between these two moving averages. But of course, first we have to reclaim the 34 EMA, and only after that we are going to be looking at challenging the 21 EMA. Only once we reclaim the 21 EMA, we can really talk about bullish price action and a continuation of the bull market. While we are below this 21 EMA, we are bearish. All right, and going back to the daily, still looking quite bearish. Now, here we have our 9th moving average. This is the very short-term moving average. Typically, this acts as our support. A lot of the times, we are using this moving average as a support. And we lost this support last week, a few days ago, in fact, during the weekend. And now it is a resistance. It is not very often that we are trending below this moving average, so I'm expecting that we are going to at least come here, try to go above this moving average, but here is where our resistance lies. So this is going to be a challenge. The more important one, however, is the 50th EMA on the weekly. And while we are below the 50th EMA, again, very bearish. So I really want to see a nice push on the upside. I want to challenge this moving average, and I'm hoping that sooner rather than later, we're going to be able to reclaim this as a support, flip it into support. In fact, we have lost this support all the way back in, what was that? February, the beginning of February. So since the beginning of February, we lost the support of the 50th EMA and we've been trending below it. Therefore, we've been on a steady downtrend, quite a strong downtrend here, as you can see. So reclaiming this moving average is everything that we need right now in order to continue the bull run. Otherwise, we are already into a bear territory. And if we fail to reclaim this moving average, we might be looking at a bear cycle forming here. It could be the early days of a bear cycle. I don't hold this sentiment. I'm only saying it as one of the possibilities, guys, but I'm not holding that sentiment just yet. I don't believe that we are in a full-on bear cycle just yet, even though on the daily here we do have a double top, and double top is quite a bearish formation. But for the time being, for the moment, we have only made something like a 30% correction, and that is not yet. 30% is what we've done, and this is not an indication of a bear cycle, not even indication of a bear trend. This is an indication of a correction. So you can call it a bear trend in the short term, but it's not a cycle. Therefore, we are still within our bull cycle. We still haven't broken major support levels for the whole bull cycle to be talking about a trend reversal. And this is the important part. We still have a chance to reclaim this moving average, to make it, to turn it into a support, and to continue our bull cycle making new highs, right? So here I've got some price targets on the way up. Of course, I already mentioned 85K, 86K. These are the immediate price targets. Then according to Fibonacci levels, we also have another price target on the upside, which is 89,000. So all of these are going to be our resistance points on the way up. On the way down, what is possible? We have a support at 81K. We established that already yesterday as well, because we challenged that level quite a few times now, and it's acting as a support. So far, it's holding quite well. If we challenge this yet again and break, then we have a lower support, which is sitting at 79,400, and even lower support based on Fibonacci levels, sitting at 76,900. Now, if we look at how we performed previously, we also have a minor support, something that was holding us earlier that we haven't challenged recently, which is at 78,500. These are the support levels that we have already established, that we have already tested, and on the way down, if we are to go any lower, these are the levels that we will be retesting yet again. So these are definitely price targets. These are levels of interest and levels that I'm personally going to be watching out for. These are support levels. Therefore, if you are trading support and resistance, you can easily, and this is something that anyone can do. You don't have to be an expert to be able to trade a support and resistance. So as we come to resistance, we sell. As we come to support, we buy, and then we repeat. We have the support and resistance levels established, so we just trade this until we see a breakout. Once we have a breakout, then we look at the next support and resistance levels, and if the breakout is here on the upside, then we have our next resistance up here, and then support becomes this. So it also becomes quite easy, you know, to anticipate sell-offs around this level and accumulation around this level. This is on the way up. If we actually break out on the downside and we go into a different range, then what happens is that this now becomes our resistance, this becomes our support, and we can trade it like that. So this is really basic level trading. It's for people who are not really very conversed with charting and everything. Everyone can find support and resistance. It's so easy. I have a video talking about support and resistance, but I already gave you the gist in here anyways. So this is it, guys, for this week. I'm not expecting any major moves outside of this range. I'm expecting that we are going to be continuing this range between 80,000 and 85, 86,000. And only after the tariffs get implemented and markets calm down a little bit, we can look into a proper recovery, perhaps a proper recovery, because we could also see a massive dump and just fall into a lower range from here. This is what I'm going to be watching out for in this week, and of course I'm going to come with another update if we see any major moves. I hope this helps. Don't forget to subscribe. Now, a reminder, just like I emphasized the importance of using cold wallets, the OneKey Pro stands out as my top recommendation for safeguarding your digital assets. This model is equipped with not one but 4 security chips with the highest industry standards. But what I love most about the OneKey Pro is that it has air-gapped signing capabilities, so you can securely confirm transactions without ever connecting to the internet. This is done by scanning QR codes, and there is a camera to facilitate this. There is also Bluetooth connectivity should you wish to use that. It makes it unique because it is the first device of its kind to offer both Bluetooth connectivity and air-gapped mode. I prefer air-gapped most of the time, but if I'm in a rush, I would use the Bluetooth option. I have a choice, which is great. And there's other things that make it worth your money, like the biometric authentication, which is just adding an extra layer of security. Plus, it supports thousands of cryptocurrencies. The list is too long to go through it here. And it's also the first cold wallet with wireless charging capability. These are all unique features that no other device currently offers. It's super lightweight and compact, fitting easily in my pocket or bag, ideal for my travels throughout the year. And whether you're at home or on the move, this wallet seamlessly integrates with both desktop and mobile phones. And the best part, you get 10% discount with my link, the most of any other YouTuber out there. So use the link, it's in the description below, or you can scan this QR code to get the discount. And this is for all of the OneKey products, not just for this wallet. I also love the touch model and even the older one, the OneKey Classic. They're very easy to use. The OneKey Classic is the most simple one, but also it is the thinnest and the lightest of all of them. So it is perfect for on the go. It doesn't have a full color display and it's not that easy to navigate with just 4 buttons. But for simple stuff and for long-term holdings where you don't really have to make too many transactions too often, it is perfect. So there's plenty of choice. You can download my free ebook where I break down these and many other devices currently on the market, so you can compare and choose the right one for you. Remember, always own your private keys and keep your crypto safe. And while you're here, just pick another one of my videos and I'll see you there.